Anish from BlackBull Markets. Now the question is, did you eat that gold trade on Monday? What a move it was. Wow. We've now recovered 50% of those losses from last week highs at 1831. We're now at 1755, which is a very neutral level of gold trading throughout the week since that huge move on Monday. Sideways trading in gold, heading at that 1728 range. Of course, CPI data recently pushing it slightly higher up to 1755. That means inflation is still apparent and gold is still somewhat demanded as a safe haven. But what happened? Well, we had $4 billion worth of sell orders hit the market as soon as the first prices came in. That is pretty unprecedented, and nobody wanted to get into that market. It was a seller's market. You're coming in and it liquidated at 1680. That's where the buy orders kicked back in. Was it manipulation? Probably not. It's not a usual trading activity to trade that many contracts of gold at Monday market open when there's hardly any liquidity available. So interesting state of affairs there. And if we look at the weekly chart though, technical levels apply throughout the trade on gold. Ever since that high at 2054, we're now in this weekly trend line, and that move on Monday confirmed that low that hit the weekly trend line around that 1680 level. As you know, that is a key support level on gold. We've had a double bottom back in March and April earlier on this year, and last year formed as a key support area. So we've retested the trend line and we've bounced up higher back to 1755 as discussed, to that mean reversion area. Now, what's interesting also about this move is there is another layer of technical analysis here. You've got an A move, a B and a C. Now that's Elliott wave confirmation on this trade. And A to B was $150 move, and A to C rather was also 150. So that's an interesting state of affairs there for the gold trade, given that weekly trend. Does that mean we're going to see another retest of 1680 and possibly continue that trend down to the 1500s, mid 1500s, where we've previously seen another area of consolidation which could possibly point further to the downside? So the real question is, where does gold go from here? Next week's inflation data and unemployment data could point to a nearer term direction, but until the central banks do anything, there's going to be no real direction change. And as we've seen from this week's trading, it was very sideways. So we could expect a lot more consolidation areas until we get more guidance from the Fed. If the Fed does indicate a rate hike, we could see that 1680 break again, get retested once more to the downside, and possibly break lower to conform with this weekly trend line which is pointing lower. So do stay tuned and trade safe. All the best.